Hey, how's everybody from BiggerPockets doing? Dave Van Horn here, President and CEO of PPR Note Company. Hopefully everybody's having a beautiful day like I am here in sunny Philadelphia. Just making sure, hey, tell me where you're from. Just need a little technical check, make sure everybody can hear me and see me. If you're coming in from somewhere, by all means, give me a little comment. Let me know where you're coming from today. So I got some great news. We're actually going to be talking about my favorite subject, how to get started in notes. And, I think it's really important for people to learn about real estate note investing. And today's topic is kind of based on the four main areas of the note business. And we're going to cover part one today, which is administration. And there's, like I said, four parts: administration, risk management, borrower management, and of course your exit strategy of your deal. And it's very similar to real estate. We're going to get into that in a little bit, roll up our sleeves. So hopefully you can hang out with me for a few minutes and maybe pick up a few pointers. Just a quick recap while we're waiting for some folks to get on with us. Our last Facebook Live, we talked about recapitalization. And it's very similar to real estate investing, where we need to recapitalize sometimes. We go out and we, maybe use private money or hard money. We acquire a property, we fix it up, and, we might want to recapitalize. We might do a fix and flip, and when we flip the house, we get our money back. Or we might refinance and turn it into a buy and hold rental, right? Well, it's very similar in the note business as well. A lot of times, especially if you're working in the non-performing note space and you get a loan reperforming, it's kind of like you're collecting payments, almost like a buy and hold rental property. And there are times when you would like to recapitalize, get your money back out of the deal, or some of your money back out of the deal, or maybe take some of your risk off the table. So last time we talked about a lot of things. I mean, everything from the velocity of money, how fast is your money working for you? It's very similar to, trying to think of the concept, return on equity. I know David Green talks about it in his book, Out of State, Real Estate Investing. He talks about return on equity. And a lot of real estate investors, when they first get into a property, they think about, well, what's my rate of return? What kind of cash flow am I getting, after all the bills are paid? Am I making a 12% return or a 20% return? What kind of return am I making after all my investment, my down payment money and any fix up, what kind of cash flow am I making? But a lot of times people forget about the return on equity, right? Now, return on equity is, over time, all of a sudden you pay down the mortgage or the value of the property goes up. And then all of a sudden you have all this equity, and a lot of times it's not being utilized, especially when it comes to building real wealth, right? A lot of times that equity is just sitting there. There's an old saying, what's the rate of return of the equity in your house? And from an accounting perspective, it's zero, right? So I think that's what David Green's alluding to. As time goes on, you might want to look at what's the return on my equity. Do I want to, trade up or something? Maybe I want to do a 1031 exchange into a bigger property. Maybe I want to transfer some rental properties into an apartment complex, that type of concept. Or maybe it's time to sell a particular property. I depreciated a lot of it already, or it's not, the neighborhood's not the same anymore. Maybe I want to trade up into a better area. All kinds of reasons people might want to sell or recapitalize. The other way they recapitalize with real estate is, through refinancing. Maybe I'm just going to refinance into, a shorter time period. Maybe I'm going to refinance into a longer time period to get a lower payment to cash flow better, right? Everybody has different ideas on that. And sometimes people, put a line of credit against it to, asset protection through debt sometimes, or give them extra liquidity. So the line of credit is a way to recapitalize and go do something else with that money, which is the equity. How can I take some of that equity, go invest it in either another real estate deal, in another business, in a note? I like notes. So there's a lot of things you can do once you recapitalize. Now, there's different things, a little bit nuancy with notes, where I'll give you an example. Seasoning could come in, and if I had a non-performing note. I got it reperforming, well, after like 12 months of seasoning, which means, the borrower was paying for 12 months or even 24 months. The longer they're paying, the more valuable the note can become. And then also sometimes real estate values go up so that the asset behind the note goes up in value, and then my note can become more valuable too. So a lot of times you might want to wait till a certain period of seasoning goes by before you think about recapitalizing on your note, right? So a little bit of technical difficulty here. I don't know. It looks like my internet's slow. Hopefully some of you guys can see me or hear me. Let me know that you can make sure I'm getting through out there. Give me a little shout out. Let me know where you're coming from today. I'd appreciate it. So, like I said, last time we were talking about recapitalization. It included everything from selling a note, flipping a note, or brokering a note. We talked about selling a partial. What else? Oh, and borrowing against the note, which there's a fancy term for it. It's called collateral assignment of note and mortgage, which is a little bit of a fancy term of how to borrow against a note and protect the investor. You do a recording at the county courthouse with the property behind the note, so it protects the investor that's lending you money. It's similar to a car loan, right? If your car is collateral for a car loan, your reperforming mortgage could be collateral for, a private loan that you have with an investor. So, like I said, if you guys are just joining me right now, we're going to be talking a little bit about how to get started in notes. And, if I said to you, what would you do? Well, hey, what would you do if you just bought a rental property? Especially from an administrative perspective. So, there's four main parts of the note business: administration, risk management, borrower management, and of course, your exit strategy. So today we're talking about administration, and, even if I just bought a rental property, I know I used to manage my own properties, and at one point I was a property manager at a RE/MAX, and I used to manage property for other people. So of course I had systems and processes, and I had, when I first bought a property, hey, I might have a folder like this, right? I'd have a folder on the property. It would have all the documents in it from when I purchased the house, right? It would have an agreement of sale in there. It would have, all my mortgage documents. It would have my deed. It would have all these documents, my homeowner's insurance. I'd have a file on the property I owned. And at one point I even owned, I had like 40 places of my own at one point. And, I had a file cabinet with all my properties. And I used to keep this is before computers. I'm embarrassed to say this. I used to have like a ledger book where I'd collect rents and have receipts and give a tenant a receipt. And it was before Excel spreadsheets. And of course, later on, you would have computerized Excel spreadsheets. And eventually, I had property management software at my job. So you get an idea that there's a lot of ways to handle the administrative part of investing in real estate. Well, it's very similar with notes too, right? So you know how, I'll give you an example. In real estate, you might hire a property manager and they would do a lot of this for you. Well, you can do the same thing in the note business. You can hire a mortgage servicer. So there's mortgage servicers out there. There's all kinds, like FCI, there's BSI, there's SN servicing, there's there's a million different servicers out there that'll manage your loan or loan portfolio for you. And basically they kind of act like property management, so to speak, for a note. And they'll do all your accounting. If your loan were, payments were late, they would send out late notices. If a lot of these servicers will even do foreclosure work, like if some reason your borrower was in default. So they kind of do a la carte, soup to nuts, anything that would be needed to service your loan. Some of them have, legal departments, that type of thing. So they're very helpful with their resources if that's what you want. Now, some people, they want to roll up their sleeves and do more of the work themselves. They might want to do their own, service their own loans or try to collect on their own debt. And, that's fine. I just caution you a little bit. Make sure that you try to stay compliant, know what the licensing laws are in your state. Some states allow you to work on the loans you own, and some might require some type of licensing or regulatory environment there where you might want to be aware of that. Just check on your state before you start into that. But so whatever you decide, obviously you got to administer it. Even if someone else is administering the loan for you or servicing the loan for you, in this case, you might still want to keep track of what's going on, whether that's through a database of some sort or some kind of at least CRM, contact management system of some sort that you're able to track or do surveillance on the servicer or the law firm that's working on your behalf, that type of thing. So when I think of the administrative part of the note business, hey, I just bought a note, Dave. What do I do? What do I do the first day? Well, I look at two parts of the administration process. One is inbound, right? And one is outbound. So by inbound, I'm thinking about things like, the overall process of tracking all the collateral files. And how I mentioned there's collateral files for your real estate deal, right? It's got your deed in it and your agreement of sale and all that good stuff. Well, there's collateral files for the note business. Actually, they're probably thinner, fewer documents. But, some first mortgages, pretty thick collateral files sometimes. Could be the loan origination docs that could be in there. There could be a title policy in there. But really the most important documents that are must-haves are the note, the mortgage, the assignment chains, which means the history of who owned the loan. So if, Chase Bank owned it and then they sold it to Wells Fargo and then Wells Fargo sold it to you, you want that chain of assignments. And also there's an allonge chain. An allonge chain is similar to the assignments, but it's like I guess it's the transfer of title of the note itself. And that's what the allonge does. So it's kind of like a pay to the order of type thing. Sometimes it's stamped on the note. Sometimes it's actual one or two page doc that is, assigning the note to the next note buyer. So you want to make sure you have those docs. And then of course you want your accounting in the file. Now you might have, if you're buying a pool of loans, for example, oftentimes you would get what's called an exception report from the previous document custodian, and they would tell you what documents are in there, what documents are missing, if any. And a lot of times they'll send you electronic versions until the real documents arrive to you or to your document custodian, whoever you choose to store your documents for you. But keep in mind, these documents in the note business, that's the actual asset. In the real estate business, it's the actual house or property, right? So you want to know, so there's one other piece that you're looking for, and it's the accounting. If at a minimum, you want to make sure you get the unpaid principal balance and the next due date. You can actually figure the accounting out yourself as long as you have a copy of the note and you have the unpaid principal balance and the next due date. You can actually back that in on an amortization schedule and figure out the accounting yourself, even if you didn't have a super sophisticated form of accounting from the previous note seller. You can kind of work backwards and figure that out. But you definitely want to get the accounting set up with your loan servicer. If you're doing it yourself, maybe you have a note accounting software, something like NoteSmith, for example, is an inexpensive note accounting software that you could purchase to do your note accounting, that type of thing. So some people do that. Some people just get the servicer to do it. Now, outbound administration, right? It's a little different. Now, outbound, you're trying to reach out to the homeowner a lot of times, especially if you're buying non-performing notes. If it's a performing note, it's pretty simple. The servicer's just sending a monthly statement out to you, just like you would get one on your mortgage on your house. You would get a statement every month and you send it in, or you set it up on ACH or whatever you do. Well, if it's a non-performing note, the outbound is a little more involved, where you're having your servicer do it. It could involve a variety of things. There might be a mail campaign. It could be a phone campaign. They might even send a door knock service out, knock on the door, leave a letter, or a skip tracing company might go out and try to reach out to the homeowner as well. So you can do a variety of things. And a lot of times the mail campaign involves it's really a letter campaign. And the letter campaign, it reminds me, it's similar to the We Buy Houses business where you're just sending out letters hoping someone responds. Well, it's similar with a non-performing mortgage. A lot of times you're sending out a letter campaign in hopes that a borrower will call in and try to resolve the situation. But at best, some of the touches involved are required, like a TILA letter or RESPA letter. TILA letter is Truth in Lending Act. RESPA letter is Real Estate Settlement Procedures Act. And RESPA is the change of servicer that you're announcing, and TILA would be used if you're changing ownership. So either one of those letters or both of those letters need to go out depending on whether you're changing servicers or whether you're just buying the loan. So that at a minimum has to go out. Also, a variety of different letters could be sent out from a servicer, everything from a billing statement to, mortgage assignment letters. There's different types of letters they might send out periodically in hopes of reaching out to the borrowers. So obviously there's this letter campaign. And then I guess at some point, sometimes, eventually it'll end up being turned over to a law firm or the in-house attorney at the servicers, where they'll send out a demand letter and eventually probably start the foreclosure process, that type of thing. So that's part of your outbound administration. You're kind of tracking all that stuff that's going on. Well, the other thing you might be tracking too is the recording of the assignment, the actual paperwork. So you got your file, you got your collateral, you have an assignment where the seller of the note is selling the note to you, and it's very similar to when you buy a piece of real estate. You buy a piece of real estate, you'll go to a title company or a law firm, right, to buy the property, and then they record the deed or the deed of trust. Well, when you buy a note, they're recording the assignment of mortgage, and that's kind of what tells the whole world you own this mortgage, right? So, obviously that needs to get recorded, and you want to do that in a timely fashion. And if you're reaching out to, the county recorder's office, you might have some questions for them. You might want to get clear on what the fees are, who to make the check payable to, where to send it, do I need a self-addressed envelope, all these different things. What's the process? How long is it going to take before I get that back? Because it could be important before you could start any of your any kind of your legal actions. You might need to have that recorded, especially if you're buying, non-performing first mortgages or something. You want to know what these kind of timelines take. It is, it's pretty common to get denied by the county recorder's office if they don't have all the right, the I's dotted, the T's crossed. They can kick that back to you, and it could delay things for you. And I'm just trying to prevent you some pain there. So you might want to find that out up front. Obviously, there's different things you can use to keep track of this. Like I said, you could have different types of software. I mean, I have some friends, they even use Dropbox to store stuff in. I mean, you just got to have some kind of system that you come up with to, make things easier for you. So, hey, if you guys like what I'm talking to you about today, we're talking about how to get started in notes. We're talking a little bit about administration. If you like what you're hearing or you want to leave me any comments, feel free to ask questions, leave a comment. Feel free to share. I'm trying to beat Brandon with the number of shares. Good luck, right? But anyhow, we were talking about outbound administration. Hiring a foreclosure attorney, that could be, somewhat out, it's definitely outbound work. You want to track what they're doing. Really, do you have the right one? Do they know what they're doing? What's their track record? How much foreclosure work do they do? How busy are they? You want to, get clear on that. Maybe check with, get a company that other folks are using that are in the same space that, in the non-performing note space if you do need an attorney. You want to find out what the timelines are, what the costs are. How much is it for a demand letter? How much is a notice of default? How much does a foreclosure cost that's uncontested? And at least it gives you some clarity on what it could run you to go through the process. How long is ejectment or eviction? Usually it's called an ejectment, which is similar to an eviction in landlord-tenant world, right? But you definitely want to track this foreclosure cycle and the sale and the ejectment process. And then eventually you might end up with an REO, a property, just like you would in the real estate business. And, it would be similar to, like you said, evicting a tenant. So a lot of interesting stuff on the administration side. There's a little bit to it, but you definitely, if you're organized and you have a system, it's pretty easy to do. So hopefully you guys like what we're talking about today. I do cover some of this stuff in my book, Real Estate Note Investing, that was written with BiggerPockets. And if you get a chance today, you can actually get a discount. I don't know if you can see this. You can have 20% off if you type in live note investing if you haven't picked up a copy already. We cover a lot of different note topics. Not a whole lot on administration, what we're talking about today. Real estate note investing is a 200-page book. It's hard to cover the entire universe of notes in 200 pages, but you can get a good general overview of the note business and some ways to get started in the space. So if you're going to buy notes, you definitely want to get an idea on how you're going to administer the note, or you're going to hire someone to help you do that, like a loan mortgage servicer. Which is what I do. I invest primarily in performing mortgages myself, and I utilize a servicer. They do a lot of the, I don't want to say heavy lifting because I don't think it's a lot of heavy lifting in performing notes. It's pretty much they collect payments and then they ACH them to me, and then they send me a statement every month and I hand them to my accountant and I'm kind of done. So I'm kind of a lazy note investor a little bit, but like I said, if you want to find out more about real estate note investing, by all means, pick up a copy of my book through BiggerPockets. You can go to biggerpockets.com/note investing. And there's a lot of good bonuses there. There's actually an ebook on staying safe in the business. We did a video with Brandon Turner, me and my partner Bob. We walk you through how to go to buy a loan off a servicer like FCI, what we look for when we buy a note, whether it's a first mortgage or second mortgage, different things we look at. Obviously, our due diligence varies based on what the asset is, right? And what else? Also, another bonus: avoiding investing mistakes with Mary Hart. And Mary Hart's an asset protection attorney. So it's a great recording if you get a chance. By all means, check it out. It's some good material. So what's next, right? Coming up, what do we have? Next Facebook Live will be on September 5th, and it'll be at 6 p.m. Eastern or 4 p.m. Mountain Time. And we're going to continue the series, how to get started in notes, and it'll be part 2. We're going to talk about risk management and how to avoid some of the risk in the note business, just kind of like you would in the real estate business. Like in the real estate business, you have homeowners insurance and maybe you have disability insurance on yourself too, and there's certain precautions you take. You might have an inspection, right? You do certain things to reduce risk in the real estate business. Well, we kind of do the same thing in the note business as well. We do certain things to limit our risk or to control the risk, so we don't want to expose ourselves too much. We end up getting in trouble or losing money, right? So next one, Facebook Live, will be September 5th, after the holiday, of course. And also coming up later in September, on September 18th at 8 p.m. Eastern, we do a note investor Q&A, question and answer session with me and my partner Bob, and a lot of times we have a guest on. And if you go to www.pprnoteco.com, you can register for our next Q&A session, which is September 18th at 8 p.m. And last but not least, we have our Mid-Atlantic Summit coming up on the East Coast. It's in Philadelphia, and we're scheduled for the end of April. I believe it's April 29th. And if you go to midatlanticsummit.com, you can sign up to be on the list for when tickets go on sale. And they should be going on sale hopefully soon. We'll have some early bird tickets coming up. So by all means, think about trying to come out. You can hang out with a bunch of BiggerPockets folks and other real estate investors from the East Coast. And last year we were fortunate enough to raise $70,000 and donate it to Project Home, a homeless charity in Philadelphia and Detroit. So it was a pretty cool event. We had a lot of fun, got to hang out with everybody, so hopefully some of you folks can make it out. And, like I said, look forward to seeing you guys on September 5th at 6 p.m. Eastern, and we'll do another session on how to get started in notes. So thanks for joining us, guys. Take care and have a great holiday.